growth. Wangoi, Citizen TV.
Foreign exchange experts are now questioning the shilling's continued stability at an average of 130 to the dollar. This follows the currency's steep depreciation against the greenback nearly a year ago. On its part, the government has defended the stability of the currency, pegging it to a shift in economic fundamentals. Jimmy Mbogo now explains the movement of the currency and why some experts believe it is being managed as opposed to allowing the market to determine the true value of the Kenyan currency.
Encourage Kenyans, if you are holding any dollars because you are fearing Eurobond, please note that now the risk of failure to settle for the Eurobond is gone, and so you need to get back to business, sell your dollars and get back to business. Don't do any speculation anymore.
These were the sentiments of the Principal Secretary for the National Treasury slightly over 1 year ago. At the time, the fundamentals of the economy were different, coupled with high inflation rate and high exchange rate. But what happened since then? As of February 2024, the shilling was trading at an average of 160 against the dollar before gaining against the same to trade at 145 and later at 130, where it has oscillated for nearly a year now. According to Central Bank Governor Dr. Kamal Thuge, the government's partial repayment of the 2 billion Eurobond, an increase in diaspora remittances and an increase in exports pushed the shilling to stabilize against the dollar.
Exports grew by at least 15% last year. Tourism arrivals grew by almost 15%, and remittances grew by 18%. And at the same time, the oil bill also reduced because oil prices were lower.
But according to the Principal Secretary for the National Treasury, Dr. Chris Kiptoo, the repayment of the Eurobond was a major boost to the shilling's gain against the US dollar. That successful issuance, he says, is what de-risked the foreign exchange market.
And from then on, you saw immediately in the next few days, the shilling came down from 160 and up to 120, 130.
However, the continuous stay of the Kenyan currency at this rate for nearly a year now is raising eyebrows, with some experts believing it is unnatural.
From what we are seeing in the last 8 months, the Kenyan shilling has moved much. Between 128 and 130, we haven't moved beyond that, which is basically evidence that the Kenyan shilling is being managed.
When you're said to be managing the exchange rate, it's a situation where you don't want the exchange rate to depreciate. And therefore, you intervene and you sell dollars in the market to stop it from depreciating.
Rufus further believes that the current exchange rate does not reflect the true value of the shilling.
I expect the Kenyan shilling would be trading at a much lower valuation, probably 110, approaching 100, mainly because of the current economic conditions that we are seeing.
You need to do empirical evidence to check whether this, you can say it was really misaligned or aligned.
The shilling is, however, expected to continue holding steady against major global currencies until 2027.